Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. In today's video, we're going to explore an expert advisor called the Garman Klass Volatility Breakout. This strategy is built around a clever volatility estimator that reads the full open, high, low, and close of every candle to sense when a quiet market is waking up. Over the next few minutes, you'll learn how it measures volatility, how it defines a breakout, and how it manages its stops and targets. Let's get started. The Garman Klass Volatility Breakout is an educational expert advisor that studies how energetic the market is before it commits to a trade. Rather than reacting to price alone, it measures volatility using the Garman Klass estimator, a statistical formula that uses the full open, high, low, and close of every bar. Because it uses the entire shape of each candle, it is roughly 5 times more statistically efficient than a simple close-to-close volatility measure, and it never produces a negative value. This EA can be applied to any market and any time frame you choose in MetaTrader 5, whether that's a major currency pair, an index, or a commodity, because every calculation is based on the chart's own candles. The core idea is simple to describe. Markets tend to alternate between quiet, coiled periods and sudden bursts of movement. The strategy first learns what normal volatility looks like over a baseline window of recent bars, and it also records the highest high and lowest low of that window to form a price box. It then waits for a single candle whose volatility expands well beyond that baseline, and which closes decisively out of the box in one direction. When that happens, the EA reads it as a possible ignition, the moment a range gives way to a directional move. This approach may appeal to traders who are curious about volatility-based systems and breakout logic, and who prefer a rules-based, symmetric approach that treats longs and shorts the same way. Risk is handled with an average true range stop and a fixed reward-to-risk target, and the EA holds only one position at a time. As always, remember this is educational information only, not financial advice, and trading always involves the risk of loss. Let's walk through the exact logic step by step. The EA only evaluates its rules once per bar, at the moment a new candle opens and the previous candle has fully completed. That completed candle becomes the signal candle. First comes the baseline. Looking at the block of bars sitting behind the signal candle, by default the last 20 of them, the strategy computes the Garman Klass variance of each bar and takes the square root of the average. This gives a single number, the baseline volatility, representing the market's normal energy over that window. At the same time, it scans those same bars for the highest high and the lowest low, and stores them as the baseline high and baseline low. Together, these two prices form a box around recent price action. Next comes the ignition test. The strategy measures the Garman Klass volatility of the signal candle on its own, and asks whether it has expanded to at least the expansion factor multiplied by the baseline. By default, that factor is 1.8, so the signal candle must be nearly twice as volatile as the recent norm. If the candle is just ordinary noise, the strategy does nothing and waits. If volatility has genuinely expanded, the EA moves to confirmation. Here it checks direction in 2 ways. It measures where the close sits within the candle's own range. For a long, the close must land in the top 66% of the range, meaning the candle closed strongly toward its high, and the close must also clear above the baseline high. For a short, the mirror applies. The close must sit in the bottom portion of the range and finish below the baseline low. Only when volatility has expanded and the candle closes decisively out of the box does the EA place a trade. Risk management is handled with the average true range. On screen is the heart of the MetaTrader 5 code. At the top are the input parameters you can adjust in the strategy tester. Baseline period sets how many bars form the volatility baseline and the price box. Expansion factor, defaulting to 1.8, is how much the signal candle's volatility must exceed the baseline. ClosePositionPct, at 0.66, controls how close to the extreme of its range the candle must finish. ATR period, ATR stop multiple, and reward risk ratio govern the stop and target, and lot sets the trade size. Below the inputs is the directional logic. The line computing ClosePos measures where the close falls inside the candle, from 0 at the low to 1 at the high. The long signal is true when the close is above the open, The close position is at or above the close position percentage, and the close is above the baseline high. When all three are true, the buy branch runs. It reads the ask price, sets the stop loss one stop distance below, sets the take profit at the reward to risk ratio above, and calls trade.buy. The short signal is the exact mirror. It is true when the close is below the open, the close position is at or below 1 minus the percentage, and the close is beneath the baseline low. Its branch reads the bid price, places the stop loss one stop distance above, sets the take profit the same multiple below, and calls trade.sell. Notice how symmetric the two sides are, the same volatility expansion and box break test, simply flipped in direction. The stop distance itself comes from the ATR multiplied by the stop multiple. That's the complete signal engine in just a few lines. Let's bring the strategy to life on this illustrative chart. Up top you can see the candles, along with two guidelines that represent the strategy's price box, the baseline high above and the baseline low below. In the panel underneath is our Garman Klass Volatility reading, drawn as a ratio to the recent baseline, with a dashed line marking the ignition threshold at 1.8. Watch how these three elements work together. On the far left, the first several candles are small and overlapping. Price is drifting sideways inside the box, and down in the volatility panel the reading is quiet, sitting comfortably below the ignition threshold near the lower part of the panel. This is exactly the calm baseline the strategy wants to measure. It's learning what normal looks like here, and the box lines are hugging the recent highs and lows. Then comes the standout candle. This bar opens near the box top and pushes upward, closing right up near its own high, a strong, decisive up candle. Look at the volatility panel at the same moment. The reading leaps above the dashed ignition line, well past 1.8, telling us this candle is nearly 3 times more energetic than the recent baseline. And crucially, its close finishes above the baseline high line and in the top portion of its own range, satisfying the close position requirement. Volatility has expanded, direction is confirmed, and the close has cleared the box. That combination is where the buy entry marker appears. The EA reads the ask, places its protective stop 1 ATR-based distance below the entry, and sets the take profit farther above at the reward to risk multiple. Now follow the next couple of candles. Price continues to advance, the up move extends, and the volatility reading begins to settle back down as the burst matures. Price reaches the take profit target above, and the take profit marker closes out the long. The trade did what the strategy hoped. It caught the moment a quiet range gave way to an upward expansion. After that, notice the market calms again. The following candles shrink back into a fresh, tighter range, and the volatility panel drops back under the ignition line. The box lines reform around this new, quieter cluster of price. The strategy is patient. It simply resets and waits for the next expansion in either direction. This time the break comes to the downside. Watch the signal candle that opens near the box bottom and falls sharply, closing down near its own low. In the panel below, volatility spikes back above the ignition threshold, clearing 1.8 once more. The close finishes below the baseline low line and in the bottom portion of its range, which mirrors the long conditions exactly. That is where the sell entry marker prints. Now the stop sits above the entry and the take profit sits below, again at the reward to risk distance. On the final candle, price follows through lower and reaches the downside take profit target, where the second take profit marker closes the short. Notice the symmetry across both trades. The same recipe of a quiet baseline, a single expansion candle that clears the ignition threshold, and a decisive close out of the box, first to the upside for the long, then to the downside for the short. A few things are worth emphasizing as you watch this play out. The volatility panel is the gatekeeper. Without a reading above the ignition threshold, no ordinary candle qualifies, no matter how it closes. The box lines are the second filter, making sure the close has genuinely escaped the recent range. And the ATR-based stop and reward to risk target frame the risk on every trade the same way. Of course, not every expansion leads to a clean follow-through like these idealized examples. In live markets, breakouts can stall or reverse, and losses are a normal part of any strategy. This chart is a teaching illustration, not a promise of how trades will unfold. And that brings us to the end of our breakdown of the Garman Klass Volatility Breakout Expert Advisor. Today we explored how the Garman Klass estimator reads the full shape of every candle to measure volatility, how the strategy learns a quiet baseline and a price box, how a single expansion candle that closes out of the box signals a long or a short, and how the ATR-based stop and reward to risk target manage each trade. Remember that everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, leave a comment with any strategy you'd like me to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.